Hello traders! In this video I will introduce you to the third point on the trend line strategy. Because I think this is one of the best strategies. It has proven to be a successful strategy for many years. I will show you how the third point on the trend line is formed, where, in what situation it is formed, as well as when to enter a deal, where it is possible to place the best take profits. From now on, we will start learning all the other strategies. We will have to take profits at the two safest levels we can have. And of course, I will show you where to put the stop because it is very important. The stop is individual for each of the strategies we will use. So you will see exactly how to trade third point on the trend line with a great success. Let me show you how it works. And so traders, today we will talk about the third point on the trend line. I would say this is one of the most important strategies that could be used constantly. First, as an introduction, I want to say that trend lines are dynamic levels of support and resistance, especially when they are on larger time frames. When we have a trend line on a weekly chart or a trend line on a daily chart, they play the role of dynamic supports and resistances, and when the price is repelled by them, we take into account that this is as if repelled by strong support or strong resistance level. Therefore, almost always the repulsion from the trend line with a good formation of candles is considered a very good entry into deal. Now, I will present to you what the strategy is. When we draw these trend lines at the top or bottom, we draw these trend lines because we expect the price to bounce off them again in the future. Because trend lines play a role of dynamic supports or resistances. Of course, when we have a trend line that is at the top or from top to the bottom, it will play the role of dynamic resistance. When we have a trend line at the bottom, from the bottom upwards, it will play the role of dynamic support. As you already know, trend lines are launched on two neighboring tops or two adjacent bottoms, and we expect the price to bounce off the trend line again. When do we get into deals? Each subsequent repulsion is taken as entry, or when we draw the trend line on two adjacent tops or bottoms, we wait for the third, fourth, and sometimes even the fifth repulsion. The important thing about all these repulsions, in order to be valid, is to repel them with a candle formation. Always, with each touch of the trend line, do not rush to enter deals, but wait to see if a candle formation will be formed. What are the best candle formations to enter this strategy? This is big pin bar. Sometimes it may seem to break the trend line, but then the buyer pushes the price up very sharply because a pin bar with a very large tail, and then the price literally takes off, creating a very big movement. The huge engulfing candle shows the same thing. Buyers are very abruptly activated and push the price in the direction of the trend line. Or morning star or evening star formations. Of course, both formations, morning and evening stars, you know one is for buy and the other one is for sell. Morning star was a formation of three candles. If we have morning star, it means it is a formation for long position. We have a candle down, a doji, and a big candle up. And evening star, in which is the opposite formation, we have a candle up, doji, and a big candle down, which is a sales formation. These are the three formations that are the most common, and right after them are very large movements. Where do we put the profits? We collect the first take profit on the previous tops if we have a long position, or on the previous bottoms if we have short position. When we have buy, we look to the left to see where the previous tops are. The first take profit is always on the previous top. The second take profit is on the next levels. If we have sell, we look to the left to see where we have bottoms. We make the first take profit to the previous bottoms, and then we go down to the second take profit. The second take profit is placed at the next levels of support or resistance, or the bottom is the first take profit, and the next level we made on the chart is the second take profit. If you don't have a near bottom or a close level, daily or weekly, look and do a new analysis to see where it is possible to place the second take profit. Where there are most bounces just before the level, set second take profit. Always 5-10 pips before the round levels. I also want to say that since we have more than one take profit, when the first take profit is hit, it is absolutely necessary to move the stop to profit when it reaches the first take profit. I will show you further how to collect half of your order, or half of the profits, and let the other half to go to plus. Stop loss. Where do we put the stop loss? We put 20 pips over the repulsion if we have sell, or under the repulsion if we have buy. If we have buy position, the price has made third point, we have a formation of candles, we have entered a deal. We put stop 20 pips under the repulsion. If we have sell, we put 20 pips over the repulsion, because if we have sales, it has made the third top. If we had sales, here are first, second, third point, the price has made a new high, we have a repulsion, a formation of candles, we put a stop 20 pips above the last repulsion. We measure 20 pips above the tail and we put a stop there. The first take profit is on the first possible level, because the bottoms are just before the zone, before the weekly level. The second take profit we set on next daily level, where the price bounced off from 1.92 Of course, we made 3 pips above the level to collect the take profit. Why is it important to be little above the level? In many cases, we will leave this deal for at least a few days. When we leave it for a few days, we do not know exactly when it will touch the take profit to either the first or the second. So we collect shortly before the first take profit and just before the second take profit, because we do not know at what time of the day it will reach this level. Sometimes it can reach the level in the evening, and in the evening the spreads are a bit bigger, and sometimes just because of the spread your take profit will not be hit. And we know that these levels play a very strong role of support and resistance, and sometimes it just reaches the right level and the price comes back sharply. To avoid this, make your take profit shortly before the levels, so that you can protect yourself if the take profit is not hit due to the spread. Each time there is a repulsion from the trend line, these rules are followed until one trend line is broken and tested. We know all the rules. We know when we enter a deal. When we have a repulsion, at least after the third repulsion, we enter into a deal with a formation of candles. We know where to put take profit first and take profit 2. We also know where to put stop. So, we'll take the first example. We have a double top. Here, the price even tried to make a small rise, broke the double top and made a fall, or let's say that something like a double top was formed. We draw a trend line on the tops and wait for the price, if it makes a correction, for this correction to come to the trend line. In this case, it has reached exactly the trend line and an engulfing candle is formed. We have entered a deal, determining the first and the second take profit. As I have already told you, the first take profit is in the area around the weekly level, and the second take profit is 200 pips below a daily level. Stop loss, we measure 20 pips over this third repulsion and put it there. Here you see the profit is many times bigger than the stop loss. This is one of the perfect formation that has formed, and I want to show you the fall after that. You see the result. Third repulsion, candle formation, first take profit hit and second take profit hit. You see how well things are going. We will take the same example, only this time for long position. We had something like a double bottom again. The price made a lift, made another correction. A new lift. We already have a reason to draw a trend line. We have two adjacent bottoms. These are not bottoms, just to clarify. Return with one candle is not a bottom. To have a bottom, you must have a formation of at least 5 candles. As an example, 1, 2, 3, 4, 5 candle. This is already a bottom. This still does not count for bottom. So first bottom, second bottom. We have a nice lift. Here are two corrections. See, it becomes the third bottom. Like this third bottom, the first candle is shaped like a pin bar. The third point, actually, the price from here has gone up and then it has touched the trend line again. It has made third repulsion. First, something like a pin bar was formed. Although this is not a pin bar because the body is bigger, but we see there is a large lower tail of the candle. The next candle is a large engulfing without any tails. The first take profit is on the front tops, as I told you, and the second take profit is on the one of the next levels you can see. Here we have drawn additional Fibonacci to confirm our take profits, but for now do not watch Fibonacci. Focus on the third whip motion from this trend line. I'm preparing a lot of examples, so don't have to worry. Third whip motion with an engulfing candle as we said, and I want to show you the result. Here we have a slight retention of the price, although all the candles are with lower tails, which means that buyers certainly push the price up, and then with one candle reaches the full take profit 590 pips, which I think is really great. Let me show you some examples of the strategies and I'll start from here. We draw a trend line, we see the first bottom, the second bottom, and we connect these bottoms by trend line. Always make the trend lines longer. And what is formed? We have the third whip motion with a nice pin bar. This pin bar has formed with a nice candle up. Perfect. We buy. We determine our profits and so on and so on. Our first example on third point on the trend line. But first I want to show you something. Here we have a downward movement. The price has reached a daily level. Then, as you can see, a double bottom is formed. A trend reversing figure, from which we have an upward movement. Whole new upward trend. Higher highs and higher lows are formed. Then the price almost reached this strong level, daily level of resistance, and formed something like a double top. Again, the price then started to move downwards in the opposite direction. Then the price again reached this daily level. But do you see something here? I want to show you. Here we have a bottom, a top, then a lower bottom which touches the strong level, this strong level, then a top and a higher bottom formed as a right shoulder, and as you can see, a head and shoulders has been formed. Another trend reversing strategy. We take the distance from the lowest part of it and apply it from the breakthrough upwards. But I'm gonna erase this now and not focus on it. I just wanted to show you this because most of the times when we have some directed movement and the price reaches some strong level of support or resistance, there we have to look for double top, double bottom or head and shoulders, because they are trend reversing strategies. Okay, I'm gonna erase this and let's move forward. The price reached a strong daily level. Then we have an impulse and a correction, forming a higher bottom and a higher top. Then, as pro traders, we know that in this case we should draw our dynamic, in this case, support zone, so we can see if the price will comply with this trend line, and we can see a third repulsion from it. Let's see. You can see how perfectly the price touches the trend line, and then we are waiting for a formation of candles or candle that will tell us that our entry point is there, in long position in this case. Here, this is our entry point. We have a formation of a morning star. We are entering a long position. You can see we draw these trend lines again when we have an impulse and a correction, then a new impulse wave making a higher highs and higher lows. So we can see if the price will comply with this trend line, and we can see a repulsion from it with the formation of candles, so we can enter a deal, because third point on the trend line is a trend continuing strategy. Okay, our stop 20 pips under the last repulsion here. Our first take profit on the previous stop. Let's see. Here our first take profit is hit. We're gonna protect the deal by moving the stop on profit and extend our next take profit to the next previous stop. Here, our second take profit is hit. Let's see what the price do next. Here, in this case, we are waiting for another repulsion. Let me erase this take profit. We are waiting for another repulsion, maybe entering another deal. But let's see what happened next. The price breaks the trend line. Then test the trend line. In this case, this is a signal that maybe this upward movement is over and the price will go into some range or in the opposite direction, a whole new downward movement. And let's see. Here, the price started to go downwards. That is why we draw these trend lines as our dynamic support or resistance zones, so we can see if the price will comply to them or the price will break them and start a new movement in the opposite direction. Here we have a perfect example of third point on the trend line, but we're gonna talk about it when we learn how to use Fibonacci retracement and divergency, because when we have 2 or 3 strategies combined that indicate that is, as in this situation, the price will fall, this is kind of guarantee that there is a big chance of a perfect deal. Okay, but I'm gonna erase now this and want to show you something else. Here we have a huge upward movement. The price has reached a daily level and forming a double top. Then, after the curve double top, a trend reversing figure, we have an impulse and a correction which tests the daily level. We're gonna talk about this example later, but I want to show you something else. First thing, after the curve double top, we enter a deal here. Then a second top, which is lower than the previous one, is formed. So we're gonna draw our dynamic resistance zone. In this case, you can see here we have another impulse and a correction. But let me take 2 candles back. Okay, we are waiting to see if the price will comply with this trend line and have a repulsion from it. And then here we can see a pin bar is formed, but it is far away from the trend line. Then we look closer and see that here we draw the trend line on this tail, but the tails are fake breakthroughs. So remember, if we don't have a whole candle that closes above the trend line, we can adjust the trend line on the body of the candle, not by the tails. We can adjust it and make 1, 2, third repulsion. So after this pin bar, we're entering a short position. Our stop loss, 20 pips above the repulsion. Our first take profit is going to be on this bottom right here, on the first previous bottom. Here, our first take profit is hit. Then we're gonna make our second take profit on the next previous bottom, down here. And we're gonna protect the deal by moving the stop on profit. Let's see. Here, the price falls and hits our second take profit. Okay, again, the important thing here is that we can adjust the trend line to touch the body of the candles, not the tails, because most of the times tails plays a role as a fake breakthrough. So we can adjust the trend lines to see if third or fourth repulsion will occur. Okay guys, another example on third point on the trend line. First, we have a huge upward movement. The price has reached a daily level. Then, if we look on a daily chart, here you can see a double top is formed, a trend reversing figure. Let's go back to 4-hour chart. Before we look at this strategy right here, I want to show you something. Here, as we already said, we have a huge upward movement. We have strong impulse upward, then a small correction, strong impulse upward, small correction, and so on and so on. In this case, it's not good to draw a trend line because it would be too tilted upwards. When the trend line is too tilted upwards or downwards, if we have a descending trend, the price can easily break it, so it's not good for trading. In this case, we have other strategies that we're gonna look later in the course, so be careful. Okay, here is our double top on daily chart. We are waiting for a breakthrough. Here is our breakthrough on the neck of the neckline. We are not gonna draw it now, but here we have the second top, and then a smaller top is formed, then a lower bottom. Here we're gonna draw our dynamic resistance zone on the tops to see if the price will comply with it and make a repulsion from it. Let's see. Here we have a fake breakthrough. As we already said, when we have a breakthrough only with the tail of the candle, not with the whole candle, this is a fake breakthrough. So we count it like a repulsion, and this is our entry in short position, because as we already said, we are waiting for a third, fourth, fifth repulsion on the trend line, and the formation of candles or pin bar or engulfing candle that will tell us that our entry point is there. So we are entering here. Our stop loss 20 pips above the last repulsion. We're gonna make it on 74 pips. Our take profit on the first previous bottom here. Let's see. Here we have another fake breakthrough, but again only with the tail of the candle, so nothing to worry about. And then the candle closes with the whole body below the previous one, so we count it like as engulfing candle. Don't worry that it has a tail on the downside of it. The important thing is that the whole body closes below our previous candle. So this is our confirmation. Let's see next. You can see here our first take profit is hit. Then we're gonna protect our deal by moving the stop on profit and extend our second take profit to the next previous bottom. Right here. You can see here the price almost touch our trend line, but it actually don't have a repulsion, so we're not looking for a deal here. And then our second take profit is hit. If we continue here, you can see that the price made the correction, and let me extend the trend line. Here we have a candle that closes with a whole body below it, so we count it as a breakthrough. And we have a test, so this tells us that maybe this downward movement is over and a huge correction or a bigger correction is coming, or a whole new upward movement. So that's why we're drawing these trend lines as a dynamic resistance or support zones. So we are waiting to see what the price will do when it comes near them. That was everything you have to know about third point on the trend line. I want you to find 15-20 examples of third point on the trend line for homework, and let's move on.